Here I'll do the London recap for today. With euro dollar and the daily, we've sort of been pausing in this demand. It's just sort of as refined to a wick over here. So this is here, these lows in front of it, so a bit of inducement in front of it. So it's not surprising that there's always sort of demand within wicks. So it's not surprising that we're seeing a bit of reaction to it. There's been no great follow through yet. So we could still continue to pull it back up towards the premium of the daily leg, but at the same time there's no great follow through yet. So what I think with the news coming up today and Friday, I think we may get a sweep of liquidity, maybe sweep these lows, and then we will get sort of the more sustained pullback. So we're just sort of ranging on all time frames at the minute, so there's nothing massively clear in any direction. But yeah, we're sort of pausing this demand and then sort of waiting to see if we're going to get a decent pullback up towards the premium. On the 4 hour, yeah, you can see we've had the sort of the reaction to the daily demand. We had the bullish 4 hour chalk, then with another bearish chalk, so that sort of cancels out the bullish chalk. But we pull back into this sort of supply. It's a flip zone as well. I think it flipped demand over here, so that could be enough to sort of, that could be the 4 hour objective completed. So we could just sort of continue bearish from here. But then again, you can see we're just sort of ranging here. So it wouldn't surprise me if during FOMC we basically sweep all these lows, the liquidity, and then maybe then we'll get sort of the more convincing 4 hour chalk and then the more sustained 4 hour pullback. Like there's some nice supply in the premium of the leg, sort of nested in daily zones. So there is some nice options in that, but yeah, nothing massively clear in the 4 hour. We're just sort of ranging around. So on the M15 then, yeah, it's just a big, massive, messy range. We had the sort of bullish boss coming off the daily demand, but we haven't had the sort of confirmed higher low yet. So whenever we get sort of a double boss and we can sort of say, right, this is the higher low, then we can sort of have a more confirmed bullish trend. Yeah, coming into London this morning, we had this push up yesterday, and then we sort of mitigated this supply, and then we had a bearish M15 chalk, and then we're sort of starting to pull back a bit now. This is where it can get a bit tricky because these lows are technically weak as they fail to put in a new swing high. So it's not the best thing in the world to be trading from here. But they can play out, and if there is super clean setup, you can consider it. But with the sort of equal lows and then these sort of unmitigated wicks below, it's always sort of possible that this will get swept to mitigate these here. And yeah, the M15 is bullish, but we can come right down and mitigate something right within that wick and then continue bullish. So yeah, it's not ideal to be trading from weak structure, but obviously it can still play out. Now this morning had this sort of M15 POI drawn on. It was a flip zone. You can see it flipped the supply. Then sort of we had a lot of momentum to the upside after it. So I was interested to see if maybe we got some clean buys from there. But at market open, we basically got this bullish chalk. So that bullish chalk basically gave us this fresh demand to trade from. What I didn't really like with this, and it's clear in the M1, is that we mitigated this sort of M15 supply wick, and then we're coming back down with like a V-shaped recovery. And then bearing in mind that the refined M15 pivot was unmitigated, I was sort of thinking that right, the bullish M15 chalk might have just been to mitigate this supply, and then basically this low might have been run and used as inducement for sort of the extreme M15 demand here. So that is why I was not overly keen on being massively aggressive this morning. But yeah, this gave you the valid supply or valid demand to trade from. And then on the M1, see here, bullish chalks up here, the M1 chalk there. So then the only real entry there was sort of the M1 risk entry in the extreme. You probably would have been tagged. It depends how much you want to cover the low. You might have just been missed there with a 2-pip stop. If you wanted to cover the low of it, it might have tagged you in. But yeah, you can see this was the M15 chalk, I think, and then you can see basically mitigate the M15 spike, and then you see we're coming back down with a lot of momentum. So personally, I would have been inclined to wait for an M1 confirmation entry from there if I was to trade it, but you can see the M1 chalk wasn't until up here, so it wasn't the cleanest price action for confirmation entry. And see it ran to 10 or pretty quickly if you were tagged. Then, yeah, bearing in mind we mitigated the M15 demand, we still had this unmitigated M15 demand below. So when prices coming back down here and ran this sort of low, there was another potential entry here. You know, you could view this as a sweep, and then you had the M1 shock, and then you could have entered there. But again, this M15 demand had already been mitigated, and then it pushed up, and then sort of this low got run. You know, if you're following sort of the expectation order flow, you would have expected maybe price to continue making higher highs and higher lows rather than run that. But again, it is a valid setup, but just the fact that the EQ had already been mitigated and the fact that there was the unmitigated demand below, I was just sort of reluctant to be too aggressive there. So yeah, there was some M1 continuations in here, but nothing that I'd be really a massive fan of. As they all say with the M1 continuations, a very fine line between getting involved higher up in the leg and chasing price, and it's an art form that I personally haven't really mastered yet, so I am quite reluctant to do it. And anyone that is new, I would sort of discourage them from doing so as well. I'd stick to sort of the entries from the M15 POIs with the basic entry model. AU, there's nothing really happening, but I'll go through it anyway. Had the bullish boss and the daily. We're in this sort of extreme daily demand now, swept liquidity, so it's possible we could get the next daily bullish leg from here. But this low, it's strong on the daily because it caused the boss, but on the weekly, you can see we swept the high, mitigated this sort of range, so that this is technically a week high, as that is your swing high, and that's your swing low on the weekly, or it's a week low, sorry, this is your swing high, this is your swing low, so it's very possible that this could be run. But yeah, with the daily, keep it simple, it's bullish, we're in the extreme demand, so it makes sense to look for longs. But then we've come into this sort of flip zone. It's a flip zone because, again, look, this isn't the cleanest price action on, but you can see there you had the daily demand. Sort of this wick came into it, we had the reaction, and then the reaction failed, so I just refined it to the wick there, that candle. So it's not the cleanest supply in the world, but it is there. On the 4 hour, I had the sort of 4 hour bullish shock coming off the daily demand, but we've mitigated this 4 hour supply, so in theory, having mitigated this, we could just continue lower in line of the 4 hour trend. But then obviously with the daily demand and the daily being bullish, we could see the 4 hour switch bullish from here now. After we sort of mitigated the supply, there was no real follow through, and again, price is just sort of ranging as it has been in EU as well. So it's likely just building liquidity, get swept during the news this evening or Friday. So yeah, again, 4 hours bearish. We've mitigated the 4 hour supply, so on the M15, I was sort of happy to look for longs, which I will go, or look for sells, sorry, which I will go through now. See here, yeah, the M15's bullish. This was the boss, so it makes sense to look for longs down here with the M15 demand nested in the 4 hour demand. But it was sort of mindful that we've mitigated the 4 hour demand, and then we'd sort of had these two sort of, you could see supply was being respected, like, you know, we had this sort of chalk, and then it pulled back up and mitigated this supply, and then we sort of pushed down again, took this low again. Not ideal, it didn't close below it, but again, it is a sign that maybe supply is in control, and we could have looked for shorts down towards this area here before maybe looking for longs in. But yeah, I was considering maybe looking for sales sort of within this extreme demand if the setup, but especially after we sort of got this sweep of this sort of internal high, but there was no tag. Yeah, you can see we swept sort of M15 high and then came into sort of the M15 supply, decent amount of momentum. Now at the start this was quite corrective, so I wasn't massively interested in it. Ideally I would like to see a V shape, but then you can see it was just sort of mitigating the demand, and then when we got this sort of V shape, then I was sort of interested in here. But as we sort of pushed out, kept pushing down, I sort of removed my limit order, and then I was looking to play a confirmation order from it, or a confirmation entry, sorry. But you can see what happens with AU quite often is it mitigates the ranges but doesn't hit the refined pivot. So you can see here we came up and we mitigated this whole sort of range. But yeah, and then again there was sort of a potential confirmation entry there if you trade ranges as opposed to refined pivots, which I personally don't really, and then you could have again placed your entry there after that M1 shock, but then see price again and mitigated the range but not the refined pivot. So that was really it with AU. I was considering maybe long some sort of that M50 or sell, sorry, from that M15 supply, but no tag on any of them on it. So that is it, guys. Markets have been pretty quiet this week. Just I think sort of they've just been ranging, sort of building liquidity for like FOMC and NFP are probably the two biggest news announcements we deal with. So I think it's just sort of ranging, building liquidity, and I think we'll probably get a massive sweep of liquidity and then sort of have a clear direction to work with. Hopefully tomorrow, following FOMC, but if not, then it'll more than likely be next week. But yeah, look, these are the times we make your money as a trader. Like, it's easy to bank whenever the markets are good, but learning the art of sort of sitting on your hands when the markets aren't clean and sort of capital preservation is massively underrated and something everyone has to learn. So use this as an opportunity to sort of work on that. So if you have any questions around, guys, just drop me a message or give me a shout in one of the public channels. Thanks.